Good evening. This is Duane Lowry for the DPP Grain Desk on Sunday, December 8th. It's currently 5:07 p.m. The outlook tonight in the grains, we're going to have a little bit weaker tone. Tuesday, USDA offers their December supply and demand estimates. I don't think the market is looking for any big surprises there. I don't think they're looking for any large deviations from last month, but it's going to be another reminder as to why the market has a difficult time to rally. We also have South American weather that still offers no concerns, no problems. Conditions, forecasts, neither one have anything to cause concern for the bears. Overall production outlook for South America is probably looking at record production, and every day that goes by without a problem makes that more of a talking point. That being said, it's still very early in their growing season. Problems could develop, and they could, that can change, very quickly. But at the present time, we don't have a concern. So with all of that and the reports out Tuesday, price action last week, I think you're looking at a little bit weaker tone here to start the week. Wheat market made new lows for the move on Friday. That's not a significant event. The wheat market has been hovering at the bottom end of parameters that were largely established in August. We had a decent rally in October, but it was short-lived, and then the market fell back, and we continued to hover at the bottom end of ranges. I think that it's difficult to look at the wheat market and get excited about upside potential because you've got wheat so much of a premium to corn, and you got a mindset in the trade that corn just can't rally and it's probably going to continue to weaken. And so when you compare the two, how can you be friendly wheat when the corn market is acting as an anchor and the wheat's already a very large premium to corn? As far as the reports go out on Tuesday, the trade's looking for wheat carryout to be down slightly from last month in the U.S., but world carryout's expected to be up. Technical conditions in wheat are susceptible to some weakness here, but they're actually pretty mixed. If it were not for the wheat's premium to corn, I think a guy could build an argument that wheat might be poised for some sort of a recovery rally here, and maybe that's exactly what's going to happen. All I'm saying is right now the tone is very heavy. It's difficult to be friendly going into this report, and you've got to expect a certain amount of pressure on the market here, even if that pressure is in the form of what it has been, which has basically been it just can't rally. As far as corn is concerned, same situation. I think you're looking at a little bit weaker here tonight. Markets performed well in this last week. We had a nice recovery rally. The problem is we can't get any energy to develop a sustaining trend, and it's difficult to imagine a fundamental scenario to get that sustaining rally. The market has performed better than a lot of fundamentalists expected last week. A lot of the discussion last week was talking about China rejecting cargoes for the wrong variety of GMO corn that they found in it. But there was never a correlation last week between day-to-day price swings and these rejection of cargoes. You've got quite a few cargoes sitting over there in flux looking for a different home, but so far that storyline has not had an impact on flat price. As far as the reports on Tuesday, most traders expect U.S. carryout to be left pretty much unchanged. Global carryout for corn is expected to be lowered, but I don't see any of that by itself having a lot of impact on price action. What could have an impact on price action is the fact that the market tried to perform well here this last week. It's had some recovery, but if we can't develop much momentum, and I'm suspicious that we won't, then we get the reports out, even if they're pretty much in line with expectations, even if they're similar to last month, there's still a reminder that the corn market has a very fundamental problem trying to get the market to rally. And that could give way after some bottom picking last week to another round of liquidation pressures here. And post-report, and I'm a little suspicious that we may see that type of thing happen. Downside risk here is probably 20 cents before you find some notable support. Significant resistance probably 10 to 15 cents higher than where we're at. Producer selling activity is slow, but as we get closer to the first of the year and after the first of the year, um, the calendar starts to work a little bit in favor of encouraging farmers to make some sales. It's difficult to get excited about making sales here. The market hasn't had much of a recovery. Basis levels have been firm. It might offer some attractive opportunities for certain locations and situations, but we may have a situation here where we can't get much of a rally, and you don't want to get caught in a situation where you're not making any sales. So I think that the doom and gloom is the weight is so heavy here. It's not unreasonable to make a little bit of sales here, even before Tuesday's report, and take advantage of what small bounce we did get last week. As far as beans are concerned, the soybean market performed well here over the last few weeks. We had a nice rally. The market came up. We met up technical objectives. We rallied, notably off of a bottom. But I think these technical rally objectives have been met, like I talked about last week in the daily comments. And I think that if you're a producer and you're sitting on unsold inventory of soybeans, you've got to be asking yourself why. Everything has a heavy tone. South American production is looming large, probably getting bigger on production ideas. Part of the reason the soybean market had a rally is because of the strong demand from China, other global locations, and a lot of pressure on U.S. supplies, and our export sales from the U.S. were very heavily weighted, very front-end weighted. So we've had the value, the benefit of that demand, and it did reflect in a price rally. But now you have to be concerned that once this demand is over, once this front-loaded demand is over, and you get closer and closer to a large South American production, how much risk do you have on the downside? And that's the scary part. I don't know how to define how much that risk that is. If you look at the price of corn, and then you try to compare that to soybeans, soybeans seem overpriced, especially if you believe the scenario that corn prices are going to continue to weaken. So I think that there's a lot of merit in making soybean sales here. Yes, we have a South American growing season in front of us, and yes, we could have a weather scare develop, and all of a sudden you're putting 50 cents to $1 more on beans. That's not an unreasonable possibility. I recognize that is a possibility. But if you're looking at the overall odds, the fact that we've had a good rally, the market has met upside objectives here. Technically, the South American crop is not under threat at the present time. It's getting larger. Perception of that crop size are getting larger. I think that you run the risk here that if the soybean market tips over here, develops some downside momentum, and starts to look forward to January USDA reports and fears an ever-growing production number from the U.S., I think you run the risk of maybe having, to break the bean market 50 cents would be nothing. To break it $1 is not an unreasonable statement. I'm not necessarily making that as a prediction, but it's certainly not an unreasonable scenario. So I think there's merit in producers making soybean sales here and rewarding the market for the rally it's had over the last couple of weeks, and trying to reduce exposure going into this January period, both for reasons of the USDA reports ahead and also for favorable South American conditions. So look for an easier tone tonight. Look for weakness going into Tuesday's reports, and I'm a little leery that there's going to be another push below the recent lows in all of these markets here as we absorb another reminder from USDA that fundamentally we're going to have a difficult time getting much of a rally in any of these markets. For the DPP Grain Desk, this is Duane Lowry. Thank you.